Good evening, class, and welcome to our taxation class for today. Our topic is loss relief. Okay, so now we'll be talking about the rules governing loss relief. I will be looking at something called current year loss relief and carry forward loss relief. These are the two reliefs we'll be looking at. Then we'll be talking about terminal loss relief. I believe that this is a one-part topic. We will not be entering into part two. We'll finish everything in one sitting. All right. So if that's the case, let's get down to business. Now, what is a loss? A loss is the opposite of making profits. Every business wants to make profits. No one wants to make loss. Everybody who wants to invest money wants to put it in a profitable venture. And so no one wants to put his money in something that will bring a loss. Or as someone will say, put money in a basket. Now, sometimes you may not set out to make a loss, but losses are sometimes inevitable. A company makes loss from its trade or business when its expenses is greater than its revenue. Now, in accounting, you have two kinds of profits. We have gross profits and we have net profits. Now, we're talking about net profits. If all your expenses is bigger than your profits, then you have made a loss. In tax, we don't look at net profits, we look at taxable profits. Now, when your allowable expenses is bigger than your revenue, then there is a loss. In arriving at the chargeable profits of a company, losses from the previous year are brought forward to be realized in the year in review. So it means that if you make a loss last year and there was no profit to clear the loss, and you come to this year and you made a profit, you are going to bring the loss from the previous year and bring it to this year. It's like carry over of courses. Like in the university, we have carryover of losses. And you are in year one, you fail some courses, which is tantamount like making a loss. And you go to year two, you carry those failed courses to year two. That is how losses that are called carry forward losses are being handled. Now, these carry forward losses are available to a corporate taxpayer. Who is a corporate taxpayer? It is the company. Now, we're going to be looking at the rules governing loss relief. There are about some rules here, about 5 or so, governing loss relief. We are going to look at these rules and we are going to play by the rules. Section 27 of the Act, Company Income Tax Act, contains provisions applicable to losses incurred by companies. The first one is the amount of loss to be allowed should be that which the revenue service is satisfied as having been incurred by the company in a trade or business during a preceding year of assessment. Now, what does this mean? It means that the FIRS is going to be satisfied that this loss was incurred by the business. It is not something that's something that is supposed to be taxable and you made a loss, and it is satisfactory to the tax authority that you've made that loss, then that loss from the previous year will be carried forward to the next year. The reference to the preceding year in the wording of SITA means logically current year losses cannot be relieved since the company must make profits to do so. So what it means here is this. If you have a loss of 1 million naira, it means you don't have any profits. If you have a loss in 2023 year of assessment and you don't have a profit, you cannot relieve it. What it only means is that you must carry it forward to the next year. So current year loss means the loss made in the same year cannot be relieved in that year. It must be carried forward. And so that's why the context here says preceding year. Mention preceding year. So any loss that is allowed must be from the preceding year. That's the first one. The second one here is, in no circumstance shall the amount of loss to be relieved exceed the total amount of loss incurred. What it means is this. If you made an actual loss of 1 million, you cannot relieve more than 1 million. You cannot be bringing 1.2 million when you made an actual loss of 1 million to relieve it. Now, you will be surprised, or you'll be kind of wondering, if I have a loss of 1 million, why will I be bringing maybe 1.5 million? Does it make sense? Well, in the last regime, before the Finance Act 2019, when there is overlap, there is a situation whereby your first year and your second year, there is an overlap and you made loss that is being treated twice. Imagine treating this 1 million twice. I've seen a question where the first year, second year, and third year were all using one particular year. Imagine having loss for 1 million naira, and you are carrying it in 3 years, making it 3 million. Now, can you relieve 3 million when you made actual loss of 1 million? No, that is where this is coming from. But when Finance Act 2019 came in, this point number 2 or point number B holds no water, because always the amount of loss to be relieved will never be greater than the actual loss. But before 2019 year Finance Act, we see sometimes people making loss more than actual loss. And in that light, sometimes you may make a profit. Let's say you make a profit of 1 million instead of a loss. And that profit is being taxed 3 times in 3 different years because they are referring to that particular one. Instead of being taxed 30%, you end up paying a tax of 90%. And so in that regard, some people prefer to make losses in the first 3 years of their business existence so that they will not be paying double or triple of some part of their income. Instead, they will be carrying losses to a particular safe year when they can now relieve them. Now, you see, in the coming in of this Finance Act, some of these loopholes have been blocked. And so the point we are taking down here is, in no circumstance shall the amount to be relieved as loss exceed the actual loss incurred. Point number 3, relief, that is loss relief, can only be against profit from the same trade or business in which the loss occurred. Now, the key word here is the same trade or business. If, for example, you are into three businesses, three kinds of business, you have insurance business one side, you have um, trading business, you have a poultry farm. These are three business: agricultural business, insurance business, and trading. And maybe you also have rental business. Now, these are like four businesses. Now, you made a loss in your trading. You cannot relieve your loss from the insurance. Neither will you relieve your loss from the rent. Yes, you may want to disclose the total amount of income that you've made in a year, but you must segment them. Perhaps you are using three different bank accounts. You must segment and you charge your loss. Loss was incurred. Now, point number 4, with effect from 2007, losses can be carried forward indefinitely and relieved against future profits. Now, this is something that was not in place before 2007. This is because before now, losses was only carried forward for 4 years. And after 4 years, if you cannot relieve them, then you have lost it finally. But with effect from 2007, losses are carried forward indefinitely. As long as the business is a going concern, the losses will be carried forward and relieved against future profits. It means that maybe you start your business in 2010, you made a loss, you carry it to 2011, made a loss, carry it to 2012, you'll be bringing all your losses, that of 2010 to 2011, 2012, all the losses you have been incurring. Maybe the time you made a profit was 2018. All the losses you have been accumulating from 2010 to 2017, you are bringing them into 2018. And if the profit you have can relieve all of them, then that is fine. If you cannot relieve all of them, you relieve as much as your profits can carry, and the remainder you take it forward to the next year until you find a profit that can clear the loss. It's just like carryover. You take your carryover from year 1 to year 2. If you clear it, that's fine. If you cannot clear it, take it to year 3 to year 4 and to final year. If you clear it, then it's fine. If you cannot clear it, you keep having, some people are having 600 level, 700 level because of carryover. Well, that's not our portion in this exam. Now, the point we are saying here is, as long as the business is a going concern, it's going to continue in the foreseeable future. You have losses, they will be carried forward until you get a profit to clear it. Then the point number E is the loss available for relief should be computed on the same basis as of assessable profit for the year of assessment. What it means is that the same basis period should be used. The losses available should be computed on the same basis as the assessable profit. We're going to be looking at some of these rules and see how we are going to apply them. Now, let's go to current year losses. Now, remember, when we are treating losses, corporate losses, we mentioned something called carry forward losses. Now, here is a new one, current year loss relief. What is that? Now, there are two types of loss relief. The first one is current year loss relief. Current year loss relief, as the name implies, is one of the methods, and it is one applicable to only individuals, not company. So when I say individuals, individuals, we have business name, ventures. These are individuals because business name and ventures or partnership, let me also put the word partnership, they cannot stand alone. They only stand under the directors or the proprietors of those businesses. Now, when we talk about company, what we meant is limited company or PLC. Now, we are saying that current year losses is for only individuals, individual taxpayer, not company. In this case, losses incurred from a particular source of income can be relieved against other sources. Now, like the example we gave before, you have 4 businesses as an individual. You have trading under a business name. You have a farm, which you carry on agriculture. You also have rental income as your own business, all under a business name. Now, you made a loss from your trading. What happened? As an individual, you can say, I have made a loss from my trading. I am going to take away my loss from my rental income, or I will take it away from my agricultural income. That is applicable to individuals, but never, never, ever for a company. All right. Now, in order to enjoy this relief, this individual must write to make a claim within 12 months after the end of the year of assessment where the loss arise. Now, what it means is that I made a loss for 2023 year of assessment, and now my accounting year ends in December 31st. And I have discovered that I have a loss, and I want to do something called current year loss, so that one, I can relieve it against other income sources. I must write between January 1, 2024 to December 31st, 2025. My write-up must be done between that time, telling the revenue service that, you see that loss I made in 2023, I am going to net it off from the profit I made in 2023. I am not going to carry it forward. That's why it is called current year loss. It is important to note that the current year loss relief is only applicable in the first year. Now, what it means is this: current year loss is relieved in the current year. How will it be relieved in the current year when you have a loss? It means if you have other sources of income that brought profits, you can say, all right, I want to take the loss away from where I made profit from this same year. It is available to only individuals, and it's going to be applicable for the first year only. If you can relieve everything in the first year, beautiful, you have been saved. But any unrelieved loss, the ones you cannot relieve, now you cannot set up the remainder against other sources of income. No, the remainder must become a carry forward loss. And once it becomes a carry forward loss, you are taking it to the same year, no, to the next year, and you are going to set it off from the same source which the loss occurred. Let me give you an example. You made a loss from your trading business. You made a loss of 1 million naira, and you are only doing 2 business, rental income. You made a loss of 1 million naira from your business. Now, you could only relieve 800,000 from your rent that same year. Now, the 200 will be carried to the next year. Now, you cannot take away this 200 from rent anymore. It must only be from your trading. So, but it means that if in the next year, you have another loss from trading, But maybe you have 500,000 naira loss from trading. But you have 800,000 profit from rent. What do? You see now, next year, because we said they must be of the same basis, next year, the 500,000 you made the next year will only qualify to be relieved from the 800 of the next year's rent. So the profit will now remain 300. Remember, you are carrying forward 200 from the previous year. That 200 will never be relieved from the remaining 300 from the rent because it is now a carry forward loss. It will not be carried again to the next year. That is how it works. Now we've seen current year losses. These are the things that stand out for it. One, it is applicable to only individuals. Two, it is only applicable when you make a writing within 12 months after the end of assessment year, the business made a loss. And three, it is applicable on the first year in which the loss occurred. Right. Let me see if there's any question here. Please, sir, the explanation is not clear enough. Now, is it clear now? Because I've emphasized. Can you go back now and check if it is still not clear? Please, can you write? It's not clear enough. Okay, so now I want you to unmute and tell me what is not clear to you so that we can talk about it. Can you unmute, Janet, so I can hear you and see what is not clear?
The current year loss relief is not clear enough.
Which side is not clear? Which side is not clear?
The side that you are explaining about 12 months after the end and the current year loss relief is applicable to a loss incurred only the first year. Those two areas.
Yes. Maybe I should use figures.
Yes, sir.
Okay,
No, just explain. I will get it.
The only way to explain now is to use figures because
okay, sir. Okay, sir.
Make it clearer.
Okay, sir. Thank you, sir.
All right. So this is let me use figures now to explain. Then we have, let's say this is current year loss. And we say applicable to individuals must be claimed within 12 months after it occurred and in writing. Applicable on the first year only. All right, let me give you an example. Now, you have, let me use your name now. Janet Ventures. Now, this is an individual. All right. So, this is year of assessment 2020. Now, you have rental business. You have trading biz. You have agric biz. All right. So you have accessible profits Let's say this one you have 1 million. This one you have dash. This one, yeah, let me just use two businesses. Let me use two businesses so that I can put here as total. So your total accessible profit here is 1 million. You now bring your loss. So now you made loss for the year. You didn't make any loss here. You made loss of 1.2 million. So this is the loss you made for the year. Okay. Now, your total loss is 1.2 million. Now, what we are saying is loss relief. Loss relief here is that this is the brother of this, and he's making a loss of 1 million. Why this person has 1,000 sitting in his hand? It will now go to this his brother and say, please, I have a debt of 1.2 and you have 1,000. Please, can you clear my debts? So it means here that he's going to bring out 1,000 debts, whereas this man is going to clear up this 1,000. So it means that 1,000 here or 1 million is being cleared. So balance here will be nil. This one will be carrying 200. So this one will now be carrying 200. This is now carry forward loss. Now we go to the next year. We go to the next year of assessment. What was this year? 2020. So this is 2021. You now have accessible profits. Let's say you have dash. Yeah, okay, yeah, you have 500. And here you have dash. So your accessible profit is 500. Then you now brought loss. Loss for the year. Now, for the year, there was no loss here. You now had 300. Let's say you now made maybe 100,000. 100,000 loss. Let's say, for example, you made 100,000 loss. Then you now say loss carried forward, brought forward. Loss brought forward was 200,000. So what it means here, your total loss is 300,000. Now you have enough money to clear this 300, right? But you cannot clear this 200 that was brought forward with this 500. This is because this 200 is a carried forward loss. The only loss that is available for this 500 is this 100. So you say loss relief, you take 100 here. This is the only one you can clear. So 100 will be cleared. So 400 will remain. And this one will be carrying the 200. You cannot clear this 200 until you get a profit. Now let's say you go to the next year. Let's say the next year is year of assessment, 2022. You now have accessible profits. You have 500 again. And this time you have 500 here again. Then you are having loss. So you cannot be having profit and be having loss at the same time. So loss brought forward just be 200. So you only relieve this loss. And so here will remain 300 and here will remain 500. So I have simply demonstrated how carry forward loss, how current year losses are available for relief for the same year. Once you cannot relieve all of them in that same year, it becomes a carry forward loss, which will wait until there is an income or profit from that same source before it can be relieved. Whereas the current year losses will be available for relief in the same year from other sources. I believe you understand this now. Now, if you don't understand, let me know. If you understand, also let me know. I want to wait for your
Understand.
feedback. You understand? All right. Very good. Now let's go to carry forward loss. Carry forward loss relief. Now this is available to all taxpayers, individuals, and company. Now remember when we were doing carry forward, when we were doing current year losses, right? We said, let me bring it back to that example. We said when we are doing current year losses, this 200 became a carry forward loss that was brought to the next year. Whom are we treating? We are treating Janet Venture, who is an individual. Now, because this one was called carry forward loss, it means carry forward loss also affects individuals. We also said before that for companies, it must only be carry forward loss. So it means carry forward loss affects individuals. How does it affect individuals? Any unrelieved loss for that year is carried forward, and so it becomes a carry forward loss. For companies, the moment you make a loss, you cannot relieve it that same year. It must be carried forward. Second, now it says here, there is no need for written application, just like we did in current year loss, where an individual will write within 12 months. Once it is a carry forward loss, you don't need to write, both as an individual or as a company. Going back to this example we did before, for an individual who has written before that I'm going to take this 1,200,000 loss to relieve from 1 million, and it remains 200. This 200, you cannot be writing again for it because you have written before. Now, when you get to this year, you made a loss of 100,000. It is only this 100,000 you're going to be writing for, not 300 for the total loss. Because this 200 was a carry forward loss, you don't need any written agreement or information to bring it again. It's only this 100,000 that you need to write because it's a current year loss. So that's it. Now, what it means now is for a company who is also doing carry forward loss, even an individual, there is no need to write. And the second part says the relief is granted on preceding year basis. Preceding year basis. Thirdly, the loss of a source of income is relievable against future income and in the same source of income. So it means that when you are carrying forward your rent, your business from trade, your trade income from trade rather, it must be relieved from income from trade and never from agri business or from rental business. Now, the last one says the loss of a source of income shall be available for relief against future income from the same source of income until it is fully relieved. Until it is fully relieved. So you'll be relieving it from that same line of business until you finish relieving that loss. What have we learned here? We have learned two kinds of loss. We've learned current year loss available to only individuals, and it has the following characteristics. One, it is relieved on the first year the loss was made. Two, it can be relieved from other sources of income. Thirdly, any unrelieved part must be carried forward, and it becomes a carry forward loss, which must be relieved from only the source of income where the profit, where the loss was made. Then fourthly, it has to be claimed in writing within 12 months. But when we come to carry forward losses, it is automatic. You don't have to write. Second, it is done on only preceding year basis. Thirdly, you cannot relieve it from other sources of income. It must be relieved from the same source whenever there is an income. And it will keep being carried forward until that same source of income fully utilize and relieve the losses. Now, that's our loss relief. All right. Now let's go to something called terminal loss. What is terminal loss? This is a loss that is made in the year of cessation. Now remember, we said losses are to be carried forward indefinitely. All right? As long as there is no profit to relieve it, the losses will be carried on indefinitely until you get a profit that will relieve it. Now, when we come to the year of cessation, it means the company is no longer a going concern. It means the company will cease to exist. It will stop trading, and so it cannot carry loss forward. What happens when there is no losses to be carried forward? Now, when a loss hits the year of cessation, this loss is seen to be lost forever. That is why it is called a loss. Any unrelieved loss that has been accumulating up to the date of cessation will be lost forever on the date of cessation if there is no profit to relieve it. That's a serious problem. Now, remember when we were doing capital allowance, we said when a capital allowance unrelieved hits the cessation year, there is a provision to carry backward these capital allowances for 5 years. There is a provision for that for only capital allowance, but there is no carryback provision for losses. So what does that tell you? It tells us that capital allowance is given much preference to be relieved than losses. And one other law we should know is that losses is high in the hierarchy than capital allowance. What do I mean? Loss is like the senior brother to capital allowance. You relieve losses first before you relieve capital allowance. Why will you do that? Because capital allowances, as the younger brother, have a chance of being rolled backward. Losses, as the elder brother, do not have that chance. So what it means is that you relieve as much loss as possible as you can. And the remainder, if you finish relieving losses, can be used for capital allowance. If all the income is taken over by losses, good and fine, capital allowance will swallow its pride and go carry it forward. So you take the remaining loss that you've made and bring it forward. Capital allowance will just be enduring. I will be praying, oh God, let there be enough profit to relieve the loss so that I can start enjoying my dividends. Otherwise, if there is more losses accumulating up to the year of cessation, the loss take the hits. It will not be compensated. It will be lost forever. And the attention will now shift to capital allowance. Capital allowance will be given 5 years backward. Go back 5 years and let's start relieving your capital allowance. If you cannot relieve the capital allowance for 5 years, then the unrelieved part is lost forever. Now, I want this part to sink. If you don't understand this terminal loss, I want you to speak up now because we're about to solve a problem. If you don't understand it, speak up now. If you understand it, go to the chat and say you understand. If you don't understand, unmute and state where your concern is. I should have feedback.
Understood.
You understood. Everybody understands. That's beautiful. All right, so that leaves us with question illustration 6.1. Now, let us look at this question. Now, mind you, in this illustration, we are going to be going back to the old regime. Let me read the question so you can understand. Illustration 6.1. Mr. Oluwalogbon established Gold Mine Fisheries Limited. Now, Fisheries Limited. Now, because they mentioned limited, it is a company. Now, it was established in 2001, meaning that it was incorporated in 2001 for the purpose of commercial fish production. The company commenced business on January 1, 2002. Its accounting date is 31st December each year, while its adjusted profit for the first 10 years are as follows. Now, note here, I want you to note something. This does not obey Finance Act 2019. Why? Because it started business in 2002. So I'm going to treat it the way it was done previously. Then we will see how it would have been if it was for Finance Act 2019 regime. So let's treat it the way this is going to be treated. And you'll be seeing how that law we gave that the actual loss you incurred in a year should not exceed the loss you incurred in a year should not be more than the actual loss. You will see it here. And I said before, it is before the Finance Act 2019 that we had that loophole. Now, I want you to look at this 10 years, and I will tell you how the previous regime worked. You need to know it and also know the Finance Act 2019 way, because your expertise might be tested. All right, what are we asked to look for? We are asked here to compute compute the accessible profit for the relevant years. So now let's do it here. Compute accessible, is it accessible profit? Yes, for the relevant years. Only the accessible profit will be computed. All right, so this is illustration 6.1. Let me take it here. Illustration 6.1. I will say Oluwa Limited. I know there's a fishery limited somewhere. Just end it like this. Now we'll start with year of assessment. Now, in the old regime, for you to know your year of assessment, you need to know the year the business started. The business started, I will say, date of incorporation, DOI, oh, sorry, date of commencement is January 1, 2002. So because it was starting business in 2002, this is the main reason for getting your year of assessment. It's always actual year basis. It's always actual year basis. So it will be 2002. And your basis period for your first year will be the date the business commenced, January 1, 2002. And it must end in December 31st. Whether your business year end is 31st December or not, it doesn't care. It ignores your account year end. It will just end it in December 31st. That is a law. So it's going to be 31st December 2002. Now, fortunately still, we were told that the accounting date is 31st December, so no problem. Even if they wrote 31st October, it will ignore it. If you like, write 30th June, it will ignore it for the first year. Everything, it will be from the date the business starts, and it will take it to December 31st. All right? So we've done that. So we'll say accessible. Is that going to be a profit? I'm saying here, okay, this is 2009. Wow. Why am I saying 2009? And they say first 10 years. Okay, so let me say that this 2009 is what they mean. 2008. Let's amend this question, because it cannot be saying first 10 years. So this will be 2008, and this should be 2009, and this should be 2009. And so this is the first year. So this is first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10. That's why they say the first 10 years. So this is 2009. So I'm going to change the dates here. We are adjusting this question based on what we read from the question. So this is 2009. This is going to be January 1, 2009 to December 31st, 2009. Right? Now, accessible loss, because we didn't see a profit, is 100,000. So we just come here, 100,000. So it will be carried forward. because there's no other profits available. It's always automatically a carry forward loss. Now, the next year automatically will be year of assessment 2010. Now, in the old regime, I said before, the old regime for the first year, which is 2009, it will start from the date the business commenced trading, and it will end in December 31st. It doesn't matter because it is actual year basis. So let me put that point here, actual year basis. Actual year basis. For the second year, it will go back to the date the business started. And what is it doing there? That is the law. The second year, we go to the date the business started, January 1, 2009. And it's going to count 12 full months. So I'll come here and say 12 full months. That's the law. 12 full months. 12 full months. That's the law. And so when we count 12 full months from January 1, 2009, it will give us 31st December again, 2009. Can you see that this is an overlap, the exact overlap? And now we will say accessible loss is still, when we check 2009, is still this 100,000 again. Accessible loss is 100,000, right? Then we will say loss for the year. Okay, sorry, this accessible loss for the year. This is loss brought forward. So it's a carry forward loss. So this is loss brought forward. Now it is this 100,000 that was carried forward that is being brought forward. This 100,000 is not this one again, technically. It is this 100,000 because it's based on the year of assessment, the basis period. That's why it is pointing to this. So both of them are having the same basis period, pointing to the same thing. That's why this one is here. But now you have to now bring, this one is for this year. Since this one had a carry forward, it must be brought forward. So you have another 100,000 brought forward. So now, when you add them up together, you are having 200,000 available for relief. But what is the actual loss? This is 200,000 available for relief. You will now say actual loss available for relief is going to be 100,000 because 200,000 is not the loss you made. 100,000. So, but you see now, this is a cheating. If it were to be profit, they would have charged the profit tax twice. But now look at loss. They are now looking at it must not be more than the actual loss. So, but it's fine, but that is the law. So you cannot take 200,000 for the next year. It must always be the actual loss, 100,000. Now the next year, being 2011, year of assessment, 2011. Now, in the year of assessment 2011, which is the third year, that is when the preceding year basis takes effect. And it will end on the account year end. That is when the account year end comes to life. So what do? I usually write the account year end first. It will going to be 31st December preceding year basis. So this is 2011. So here will become 2010. If this is 31st December, it must have started from January 1, 2010. So now look for an account we have that is ending in 31st December 2010. That is where the accessible, we don't know if it is going to be a profit. Accessible, we'll now go and check for 2010. We have 2010 here, 30,000. So we say accessible profit. So that's going to be 30,000. Loss brought forward. Let me bring the loss brought forward here. 100,000. Now, the loss you are bringing forward, you have 100,000 debts to pay, but you only have 30,000 naira cash. So what you do now is loss relief. Loss relief. You can only relieve 30,000 that you can carry. So now, you see here was minus or bracket 100,000. When you want to relieve under here, you put it without the bracket. You write the same thing here, 30,000, but this time in a bracket. Why? Because you're going to take it from this 30,000, but here it was minus before. You are reinstating. What it means is that 100,000 is your debt. 30,000 is available to be paid. That is why you brought it as positive. Now, this is where you actually pay it from this. So what you will now do here is, this is going to be accessible profit. Here is going to be nil because this 30,000 has been paid with this accessible profit. Then now you will say loss carry forward. Loss carry forward. You have 100,000 as your debt. 30,000 has been paid for. 70,000 is to be carried forward. So you are carrying this 70,000 to the next year. You go up again in 2012. This is year of assessment. 2012 is going to be January 1. Now this is preceding year basis. Let me write it here, down here. For the third year and subsequent year is going to be preceding year basis. So that is how the old regime was. Now in 2012 is going to be preceding year basis. So this is 1/1/2011 to 31st 12/2011. Okay, I'm going to rule that. Accessible, we don't know whether it's a profit or loss, but let's look at year end 31st December 2011. 31st December 2011, we have 25,000. So that's accessible profit of 25,000. I'm going to put profit here. Profit, this is 25,000 in positive. Then we come down and bring your loss brought forward. So this is a carry forward loss which is being brought forward. Now this is 70,000 debt or loss that is crying out for relief. But you have 25,000 available for any kind of relief. So what you do now, you say loss relief. Once again, you bring this 25,000 out for relief. Then you take it down here for relief and put it in brackets. So what it means here is your accessible profit. Your accessible profit is nil, and your loss carry forward is going to be 70 in minus. This is 25,000. How much will it be? 25, 35, okay, 35, So this is going to be like, let's do it together. Let's not be assuming. 70,000 in brackets plus 25,000. That's going to give me 45, sorry. It's going to give me 45. So 45,000 is a variable for relief. So you take it down here and relieve it. 45,000. So this is what is going to be available for relief. All right. Now we go to the next period. Just a moment. Go to the next period. This was 2012. So I'm going to go to 2013. Year of assessment, 2013. This is going to be from January 1, 2012 to 31st December 12. We don't know whether it is assessable profit. Let's see. It's possible. 2012. That's 20,000. 20,000. Assessable profit here is 20,000. Then you have your loss brought forward. You are bringing forward this 45,000. 45,000 is brought forward. All right. Then loss relief. The loss relief, you have 20,000 to relieve. So you reinstate 20,000, bring it for relief, and you come here, you relieve the 20,000 actually here. So this will become nil. So your assessable profit will be nil. Your loss carry forward will be 25. Okay, so your losses are being carried forward indefinitely until you get a profit. So we are going to go to 2014. Year of assessment, 2014 is going to be from January 1, 2013 to 31st December 2013. Preceding year basis in action here. So let's look for an account ending in 31st December 2013. Let's see what it's going to be. It's going to be 15,000. Assessable profit is 15. Assessable profit is 15,000. Then you're bringing your loss brought forward. It's 25,000. Then loss relief. You are going to bring 15,000 out for relief. Okay, so this will remain 10,000 on relief loss. Okay, sorry, I shouldn't have done this first. Okay, let me do this first. This is new. So this is your assessable profit. I'm going to do here loss carry forward. Put it in brackets. So your 10,000 is going to be available for relief for the next period. So what year was this? This was 2014. We are now going to year of assessment 2015. Year of assessment 2015. This is going to be January 1, 2014 to 31st December 2014. Okay, we are having accessible, is it profit? We hope so. So let's check for 2014. 2014 has 35,000. 35,000. So we have 35,000 here. Loss brought forward. Your loss brought forward was 10,000. Now you have 35,000 and I can clear the bill. So you come here, loss relief. You are going to bring the 10,000 for relief. You bring it down here, becomes 10,000 here. So what happened now is you now have something as your accessible profit. So accessible profit will not be 25,000. Assuming there was capital allowance, that is when capital allowance will start breathing a sigh of relief that they can now start eating their dividends. Because all this while, capital allowance has been enduring patiently, being carrying forward capital allowances, lumping them up to this point. They will now say, let me eat from this 25,000. All right. And now there will be no loss to carry forward. So no need to write loss carry forward because it has been cleared here. So the next thing to do is to go to the next year of assessment, which is 2016. What do we do? Year of assessment, 2016. This will be from January 1, 2015 to 31st December 2015. We are also having accessible profit. Let's see 2015 if there's a profit. 2015, we have 50,000. That's beautiful. 50,000. There is no loss to bring forward, so you just close it because the system is asking us for just accessible profits. So we move to the next year. The next year, let me do is 2016. Year of assessment, 2016. That will be from January 1, 2015 to 31st December 2015. Accessible loss. Accessible loss, we are told, is 40,000. 2016. So it's going to be 40,000. Now you may be wondering, didn't we have 50,000 before in the previous year? And didn't we have 25,000 in the previous year? Can we use this 25,000 from 2015 and 50,000 in 2016 to come to relieve this loss? To come to relieve this loss in 2017? No, sir or ma'am, we cannot do that because we said the losses to be relieved must be of the same basis. So it means you cannot bring a profit from a previous basis period to come and relieve a loss in another basis period. Never will that be done. Rather, this loss will become a carry forward loss that will be taken to the next year. You will not import profit from there's nothing like carry forward profit. That's the point. There is nothing like carry forward profit to come to this year to relieve the loss. But we have something called carry forward loss, which we will carry forward to whenever we have profit. We will not be bringing profit that we have taxed from the previous year to come to this year to come and relieve. No, it will not work that way. Rather, the profit ends where it ends. If it has enough profit, you enjoy it. If there's a loss, take it to the next year. So this becomes a carry forward loss. Now, We'll go to the next year, which is 2018, year of assessment, 2018, which is going to be from January 1, 2017 to 31st December 2017. Of course, this one here was 2016. Let me write it well. So this was 2016. Now we're dealing in 2017. In 2017, we have 35,000. All right, we have 35,000. So I'll come here, accessible profit. This is 35,000. And I'm having my loss brought forward. I have 40,000 from loss. I'm going to reinstate 35,000 for relief. Loss relief, 35,000. I'll come here, 35,000. So we are going to be carrying only 5,000. Oh, I shouldn't have written it here. Sorry. I'll come here and I'll do my accessible profit. Yes, I can sometimes write this here, no problem. But for this lecture, I want to write accessible profit first. Accessible profit, new. Then I'll have my loss carry forward. Loss carry forward will be 5,000. So now this is 2018. We are going to, excuse me, year of assessment, 2019. That will be from January 1, 2018 to 31st December 2018. What do we have? I think we have accessible profit. Let's see. The one that carries 2018. For 2018, we have accessible profit of how much? 30,000. 30,000. So we have accessible profit of 30,000. Then we have our loss brought forward. Loss brought forward was 5,000. Yes, we have enough profit to clear the loss. So we have loss relief is going to be 5,000 reinstated, 5,000 going to be relieved. So this will be 25,000. This is going to be your accessible profit, and there will be no loss to be carried forward. This is 2019 year of assessment. There's nothing to carry to 2020 year of assessment. Now, this is how loss relief is being done. Now, before I proceed, I want you to comment if you understand what I just solved here in this particular question. If you do not also understand, speak now and tell me where it's not clear to you. If you understand, let me know. If you don't understand, let me know now. I'm waiting for your feedback. You can unmute and talk if you want to. Okay, someone is sending a message. Let me see what the message is. The message says, I understand. Thank you so much, Janet. All right. Janet seems to be the only one talking today. Janet, you're on fire. Patricia, I've not heard your voice. Tosin, what about you?
I've been the one talking since. Janet
Yes.
has been typing.
Okay, so you understand this now, right?
Yeah, I do.
Beautiful. You students, you are on fire. All right. Let's see if we can solve one more question, and we'll call this topic quits. I'm seeing another typing. Patricia said, I understand. Beautiful. I like this. I like this. This is what I like. All right, so you can go further and look at how I can solve theirs, but I think mine is clearly explained, although they shortened theirs, but this is clearly explained from my own solving. Okay, that's fine. Now, look at the notes here. They said Gold Mine Fisheries Limited is allowed to carry forward unrelieved losses indefinitely and recoup same against future profits. 2, readers were not required to compute the tax liability, as it is the computation of assessable profit that was required in this question. So you see here, I was not calculating profit tax. I was only calculating assessable profit. But in some questions, you will see, will ask you to calculate tax. Now, what have we done? We have looked at the loss in a trading business of a company and also for individuals, and see the rules on relieving of losses. The readers must have known the operation of this relief in terms of how and when and to what category of taxpayers that can benefit from this relief. We said for current year loss, individuals will benefit from it. Current year loss, that is the category, and when they will claim it within 12 months after the end of the year in which that loss has occurred. How? They will claim it in writing, and they can relieve it from other sources of business that had profit in that same year of assessment. Any unrelieved losses will become a carry forward loss. Now, carry forward losses are enjoyed by both businesses, companies, and individuals. No need to claim it in writing, but they must only be relieved in the same line of business. All right. We also learned that terminal losses are lapsed. They cease to be relieved any further, so they would have been lost completely. Let's look at a work question. Let's see if there is any. All right. Rodan Nigeria Limited has been in business for several years. The company makes up its accounts to 30th June every year. The audited accounts for the years ended 36/28 to 36/2012. That's for some years, contain the following. Now, this is not commencement of business. This is not change of accounting date. And this is not cessation of business. This is just ongoing, continuous business. And everything we are going to be doing is going to be on what? Preceding year basis. Now the question is, you are required to compute what? The total profits and tax payable for the company, by the company for the relevant years of assessment. Now, take note, because this is 2008, this is 2009 year of assessment, this is 2012, this is 2013 year of assessment. This does not concern Finance Act 2019, but the same principles of Finance Act 2019 will still be applied here because everything will be done on preceding year basis. The only difference, take note, the only difference is the tax will be charged at 30%. The tax will be charged at 30%, irrespective of the revenue level that is the only difference. All right. So here we have profit and loss. We have our capital allowance. We have interest on savings. Then we have balancing charge. So how do we do this? Now, profit or loss, this is a loss. Interest on savings is a revenue, right? And I said before, loss before capital allowance. Balancing charge is also something that increases your taxation. If there was a balancing allowance, it will be falling under capital allowance too. So we said the rule here is loss before capital allowance. So you bring your loss first and claim them before capital allowance can start enjoying. So let's take the first one. The business is Road and Nigerian Limited. This is a company, and we know that this is going to be what? Carry forward loss. Carry forward loss. Road and Nigerian Limited. So let's go there now. And Nigeria Limited. We now say total profit and tax for year of assessment 2009 to 2013. All right. So we have, this is called P&L. So this is not assessable profit or loss. We are now going to do the adjustment. So net loss, we had a loss of 60,000. So this is 60,000. That's your loss. So this is look at what we'll be doing. The stage is take this first, this second, third, and fourth. Now, this one will always be lessened. After taking this, then tax will be fifth. Okay, so I'll be putting the tax here, and I'll be calculating only the company income tax. Company income tax. Although you can calculate education tax. If you want to calculate education tax as at this period is 2%. You can decide to calculate tertiary education tax. So let's say that is the 16 I'm going to calculate. So we take our profit first, or loss, 60,000. The next thing is the interest on savings, which is like a revenue. So interest on savings. How much is that? So as I'm taking this. I'm going to take this now. Oh, sorry, it's not this. I'm going to take this 4,000. So interest on savings is 4,000. Then we have balancing charge, 2,000. 2,000 gone. So what is happening here? We have 60 minus 60 plus 6. That's going to give me 54. 54,000. This is going to be what? It's going to be our accessible loss. Accessible loss. Carried forward. We said loss before capital allowance. So this is the loss that is going to be carried forward. Then we'll just bring our capital allowance. Capital allowance for the year. It will still be carried forward because there is nothing to relieve it. Capital allowance for the year, we are told, is 20,000. You just bring your 20,000 here. You are carrying it forward. You can't do anything about it. Now, your total profit. Total profit. Whenever you don't have any profit, whenever you don't have anything, whether you have a negative accessible profit, your total profit is nil. And so your CIT at 30% is also nil. Your tertiary education tax at 2%. What is blocking my view? Something is blocking my view. Your tertiary education tax is also going to be nil. So as a rule, whenever you are calculating CIT, also be calculating tertiary education tax because both of them are filed the same period. So this is 20, which year of assessment is this? Should have done it. Year of assessment, 2009. It will, because they said the account year end is June 30th every year. So it means this must have started from July 1, 2007 to end in 30th June 2008. That's why it is preceding year basis to 2009. All right, the next one will be 2010. Year of assessment 2010 would have started from July 1, 2008 to 30th June 29, preceding year basis. So we'll come again, we say the profit or loss, so that there is a profit 200,000. So you say net profit 200,000. The next thing to do is interest on savings 6,000. Interest on savings 6,000. Then we have balancing charge. How much is the balancing charge? 5,000. Take it that this is 5,000. You add them up together, this is 211,000. So this is your accessible profit 1. There's a reason why I'm making this 1, because I'm going to make reference to it. Accessible profit 1. Then the next thing I said, loss before capital allowance. You will come here and say loss brought forward. Loss brought forward was how much? You go to the last year and you saw that loss was 54,000. So you come here and say 54,000 was brought forward. Now, you have 211,000 to play with. So you say loss relief.
Mr. Chim, how did you get the 54,000 loss that you brought for?
It's from this one that was carried forward.
Okay.
That's why it's called carry forward loss. So now
Yes.
loss relief now, 54, you will now release it for relief. Bring it down here again, 54,000, put it in bracket. Now, normally before I usually write my accessible profit first here, right? That's what I did in the last one, but now I will do this first. This is the one that should be done first now. Now you will say, this one is done. No loss is relieved. So no loss is carried forward. You do this one last. So I will now check 211,000 minus 54,000. That will give me 157,000. 157,000. All right, so I'll write my 157,000. This will now be my accessible profit. Accessible profit 2. All right. Accessible profit 2. Then I'll come here. Capital allowance for the year. How much is the capital allowance for the year? We have 24,000. We're going to bring it down here. 24,000. Remember, there was a capital allowance that was praying that there should be enough profit so that it will breathe a sigh of relief. This carry forward, we'll bring it down now. We will now say capital allowance brought forward. Think how much was that again? It was 20,000. Let me not forget it. This is 20,000. When you add them together, this will give you 44,000. We'll call this one capital allowance available for relief or for claim. So you see now we are learning capital allowance with this topic, 44,000. Now, how much capital allowance can you claim? So I will say capital allowance relieved or claimed. Now, the thing is, we said for capital allowance, if a business is a manufacturing business
or agriculture,
business, you will not do restriction.
Mm-hmm.
Every other business, there will be a restriction. And this is every other business. So let's see what the restriction is. The restriction is your capital allowance to be claimed must not be more than 2/3 of accessible profit 2. So let's do it now. We already have about 157 here. Just say multiplied by 2/3. So this is the highest you can claim. 104,667. This is the highest. You cannot claim higher than this. Now check. We have 44,000, which is far lower than that.
Mm-hmm.
Meaning that you can go ahead and claim
everything.
44,000. You can go ahead and claim your 44,000 because it is not up to the maximum claimable. So this is how you claim it. 44. You come here again. Now, unlike what we did in loss, where we have bracket up here, and we bring positive here. Here we'll put it in bracket here. The same way, we'll still put it in bracket here again. We are deducting it from here. We're also deducting it from here. So it means that no capital allowance is carried forward. And so what is going to be here? This is going to be 153,000, right? Now this is going to be your total or taxable profits.
Mr. Chima,
Yes.
where is this 4,000 coming from?
Sorry, it's 44,000. I mean,
Uh,
it's 44,000. Uh-oh, it's a mistake. I wanted to write 44,000. 44,000. Thank you for that. So it's going to be 113,000 because 7 minus 4 is 3, 5 minus 4 is 1. 113,000, right? That's fine. That's your taxable profit or your total profit. The next thing to do is to calculate your CIT, which is, I'll put it as 30% of taxable profits. You do the maths. 30% of taxable profits. I will now say 0.3 times 113,000. That will give me 33,900. 33,900. So I'll write it down here. $33,900. Now this is your CIT. Your tertiary education tax is going to be 2% of accessible profit 1. So remember, the first accessible profit you get, that is where you calculate your tertiary education tax from. The second accessible profit you get is what you calculate your capital allowance restriction on. So this one here is for calculating tertiary education tax. This one here is for checking the maximum capital allowance to be claimable. Now,
Mr.
sometimes,
Chima, please come again. I don't understand that one. I did not get it.
okay, when we were doing capital allowance claimable, and we got 44 here, what did we do? We said 2/3 of 157,000, isn't it? And we got 106,667. Then I'm telling you that this accessible profit 2 is what we use to check capital allowance restriction.
Okay.
Never accessible profit 1. Accessible profit 1 is what we are now using to check our tertiary education tax. It's going to be calculated on accessible profit 1, not accessible profit 2. So that's the reason why I'm putting 1 and 2. So that if I just put accessible profit without putting 1 and 2, you might get confused that why am I not using this? Why am I using this? Or you might get confused. Why am I doing my restriction on this and not on this? So this accessible profit 2, the main purpose is for capital allowance purpose. This accessible profit 1, the main thing is for tertiary education tax. Sometimes you might just only have one accessible profit. So you may not have 1 and 2. So both of them will be used for both capital allowance and for tertiary education tax. When there is 1 and 2, you know how to channel it. So 211, find 2% of 211. 211,000 times 0.02, which is 2%, that's going to be 4220. So this is going to be 4220. Four, 220. All right, so that's your tertiary education tax. So what have we done? We've done for what year? We've done for 2010. We're now going to do for 2011. Year of assessment 2011 is going to be from July 1, 29 to June 30, 2010. All right, June 30, 2010. So it's this. So we are going to be taking the profit. The profit is 240. So this is net profit. Note here it is not accessible profit because they look profit and loss. If it is accessible profit, they would have written it. So this is net profit 240. It's going to be your 240. The next thing here is interest, 8,000. Interest on savings, 8,000. There was no balancing charge. So this is 248,000. Now, capital allowance, there was no capital allowance brought forward. So this is your accessible profit. Accessible profit. If I were you, I would just come and put 1. Although I know that it's only one accessible profit we'll have here. So we'll have capital allowance. So anytime we don't have any loss, we will only have one accessible profit. It is when we have two loss, if we have loss, we'll have two accessible profits. So capital allowance, we are told here is 28,000. If we decide to check 2/3 of 248 to be far more than 28,000, so we just come here and bring your 28,000. This is available capital allowance relieved. It's going to be 28,000. 28,000. So this is going to be 0. Here, accessible profit is going to be 220,000. Not accessible profit, rather, is going to be your total profit. It's going to be 220,000. And of course, you have your CIT. You are going to be calculating 30% of total profit. And what would that be? 220,000 times 0.3. That is going to be 66,000. 66,000 is your capital company income tax. So this is going to be 66,000. Then your tertiary education tax is going to be 2% of accessible profit. 1. Of course, we have only one accessible profit, which we got to be 248. So you check 248,000. 248,000 multiplied by 0.02, which is 2%. This is going to give me 4,960. 4,960. So I'm going to write it down now. 4,960. So that's it. So what we have done now is for 2011. So That is how you do for 2012. For 2012, we have a loss. So let's do that. Year of assessment, 2012. So it's going to be from July 1, 2010, July 1, 2010 to 30th June 2011. And we have net loss. How much is that? We have 180. We're taking that 180. All right. So the next thing now is interest on savings. Interest on savings. How much is that? Interest on savings. We have 7,000. We have 7,000. There's no balancing charge. So this is like saying this is 173,000. The loss has reduced from 180 to 173 because of this interest on savings. Okay, then this is going to be your accessible loss carried forward, because you cannot be making profit and loss at the same time. This is a company, it must be a carried forward loss. Then there was no capital allowance that was carried forward from last year. So now we have our capital allowance. Of course, there's no profit here to relieve it. So it must also be carried forward. Any capital allowance you get that year must be carried forward, 40,000. So I'll come here and put 40,000 is going to be carried forward because there's no profit to relieve it. We'll go to the last year. This is going to be year of assessment 2013, which is from July 1, 2011, to 30th June 2012. All right. What do we have? We have a profit of 300,000. We have net profit 300,000. Then we have what again? Interest on savings 10,000. Interest on savings 10,000. We also have balancing charge. Balancing charge, we have 3,000. Total them up will give me 313,000. This is your accessible profit 1. Right? Then the next thing is loss brought forward. So each time there's a loss, we'll have accessible profits 2. So this is 173,000. So this is 173,000. That was your loss. Now, you have 313 to play with to pay this. So it means that loss relieved. You can relieve this whole 173. You are going to put it in positive. Then you come here and put it in negative. So 3 minus 3 give me 0. Now 11 minus 7, 8, 9, 10, 11. So that is going to be 4. Then here will become 2 minus 1 is 1. So this is 140. Your accessible profit 2 is 140,000. All right. Then you come here, capital allowance for the year. Capital allowance for the year is 32,000. Now this is 32,000. Capital allowance brought forward. Okay, this is not, this is brought forward. Brought forward. Brought forward. Now brought forward 40,000. So this is going to be 40,000. Okay, so 40,000 plus 32 is going to give me 72,000. This is capital allowance available. Now, we are now going to do 2/3 of 140. 140,000, which is accessible profit 2, multiplied by 2 divided by 3. That means 93,333. Wow. So, assuming this one was assuming this was instead of 40,000, assuming this one was 62,000 instead of 32, assuming this one was 62,000, I want to do something here. Let's change this from 32 to 62,000. So what we would have done here, this one would have been 62,000. 62 plus 40 would have been 102. 102. And we said that the highest that we can take is 93,333. I want to apply it in this question. So you will say capital allowance. Capital allowance relieved will be 93,333. Then that will become 93,333. Now take note, I have altered this question. So it's not when you are reading it from your book, you will not say, ask me, how did I get this 93,333? I altered this question so that I will now have capital allowance carried forward. We will now say 102,000 minus 93,333. That will give me 8,667. That will give me 8,667. 8,667. That is what will be carried forward. Then what you will not do here, you will not say total profits 140 minus this 93,333. So 140 minus 93,333. That will give you 46,667. 46,667. 46,667. That will be your total profit. Then your CIT at 30% of total profit. What would that be? You just multiply this by 0.3. That will give you 14,000. So that will give you 14,000. Write it down here. 14,000. Then your tertiary education tax is going to give you 2% of accessible profit one. Our accessible profit one was 313,000. 313,000 multiplied by 0.02. That gives me 6,260. 6,260. So that's what I'm going to use, 6,260. Wow, it's going too fast. 6,260. $6,260. Note here that I have changed this last part of the question by making the capital allowance to be 62 instead of 32 to achieve something, so that we can learn that restriction on capital allowance, how it works. Otherwise, this particular question, you will not be needing to do restriction on it. I just have to achieve that so that we will learn that restriction on capital allowance. And so that is how we come to the end of our question. That's how we come to the end of this topic. And I said before that this topic is a one class topic. Now, our next topic, I'll reveal that to you in our next class. So, come prepared next week when we are going to be looking at a different topic entirely, so that we are going to practice these ones now, practice more questions from your past questions. If you have any question or concern, let me know. I'm going to handle that. So thank you once again. I'm going to stop sharing. I'll see you in the next class.